Thank you, Stefan and Wenjie. We have a few questions. So the first one is more related to geopolitics. It says, we know Russia's invasion to Ukraine was a catastrophic event. Many investors are worried about the geopolitical. Can you share your view on your exposure to the US-China sanctions and, of course, also Taiwan?
Yes. The US, China, and Taiwan have lived very peacefully for over 50 years with the so-called One China policy that was introduced in 1972 by President Nixon. It seems that America has somewhat changed its stance on the One China policy recently, be it through visits like the one by Nancy Pelosi on August 3rd, or statements by President Biden regarding Taiwan, most recently on 60 Minutes in an interview on September 19th. So what is the reason behind this? We think most of these actions are actually motivated by US domestic political considerations, meaning with the intent to gain votes in the upcoming midterm elections. Unfortunately, as many observers would probably agree with me, the US is a divided country, unfortunately. And the only issue where there is agreement across the aisle, meaning between Democrats and Republicans, is China. So being tough on China is what might bring votes. Other actions against China include the restrictions on Chinese companies with regards to doing business in the US, e.g., for example, Huawei, that was curbed for doing business in the US, and also the most recent announcement in terms of the export curb on artificial intelligence and supercomputing chips to China. The question for me is, where does the US want to take this? What is their long-term plan? I doubt that America even has a long-term plan. The biggest risk, in my view, is that the US and China might unintentionally stumble into a confrontation that both sides really don't want.
Thank you, Stefan. Another related question. Does China have risks like Russia to be under sanctions if there are links with Russia or other problems with Taiwan?
So far, I think China has always implemented any sanctions that were imposed by the United Nations. And this is the case this time as well. I think China has lived up to all those internationally decided sanctions. Of course, China does not live up to any unilaterally imposed sanctions by the US alone or by the Europeans and the US that are not supported by the international community.
Okay, thank you. Another unrelated question. What do you think about the digital yuan? Any threats or opportunities?
Sure, I'll try to take this question. So the digital yuan is very important milestone for the Chinese central banks. I think there are a couple of threats and opportunities as a result of it. First, if you think about the opportunities, it gives the Chinese government direct way of sending a cash to your bank account. So in the futures, we've seen this actually in Japan, in some of the even the US to some extent, that during the COVID in 2020, it takes a while to send the cash directly to individuals' bank account. But having a digital yuan, it's going to be much easier. And also it also gives the government more control on the currency circulations. And for example, I used to cover actually India. India had a lot of problem with the corruptions, and people are basically hiding their monies under the bed. And this is the reason India, about I think 3 or 4 years ago, they basically canceled the bills of high nominal value of the bills, and they issued a new round of bills. So there's definite opportunity on the threat side. Yes, this is from a Western side of point of view. I think people will be worried that their spending patterns will be more closely monitored by the government. That's also a concern. I think after 3 years of quarantine measures in China, for example, every time we enter a gym or a building, you have to scan your QR code. We hardly see this go away. Just like Stefan and I, we live in Hong Kong. Hong Kong, never removed that camera to measure your temperature when you come to the Hong Kong's airport. So these kind of the measures like scanning QR code, tracking individuals' positions and record them. This is going to be an invasion to the privacy, and we don't think the global investor will agree with China on that as a result of the digital yuan. Stefan, do you have anything to add? Or?
No, I think absolutely. I think in support could be, of course, that the digital renminbi might be a way, to help the internationalization of the renminbi, right? As China is trying to increase the use of renminbi, and I think currently our latest figures, I think is around 3% of global transactions, I think are done in renminbi. I guess this might increase, given that I've heard the Russian central bank is holding now more renminbi as a reserve currency, and also some other transactions actually are executed in renminbi. So that digital renminbi could definitely be a help in that respect, and is already scrutinized actually by the US, exactly that move, because China seems to be a bit ahead in the game of introducing a digital currency backed by the government.
Thank you. Now we have another question related to COVID. Do you think that after the Party Congress, the President will allow the use of more efficient Pfizer, BioNTech and Moderna vaccines, which could be a game changer?
Right now, China is actually in its own R&D phase of the mRNA vaccines. So the short answer to your question is we think it's unlikely China will import the Pfizer's or Moderna's vaccines anytime soon. Their own homemade vaccine, I think, is still the solution that the government is hoping for. I think if we just look at it on the factual base, right, the death rate of the new COVID variant is way lower than it used to be. So I tend to agree that the effectiveness of the Chinese vaccine is not as high as the Western world, especially the mRNA. Well, we all know that mRNA is more effective, but it also generates higher side effect. But the COVID virus itself is also less harmful than it used to be. So we think China will stick to its own vaccine, and this is unlikely to be going to be a quick fix. In China, it's really rare that you see people turn on and off very quickly on the policy seeking for a quick solutions. Rather, this is some characteristics of China is when they decide a certain policy, they will implement it, even though during the time it could be difficult, but it takes multiple years to do it. But there's a general strong belief that the government will insist with the domestic made vaccine.
Thank you. Now a question relating to the energy crisis that we live here in Europe. It's very, very painful, and we expect electricity cuts this winter. What's the situation in China? Are they going back to coal? What are the decarbonization plans?
Sure, I try to answer this question. So this year, I think China, just like Europe, we experienced a very hot summer. Actually, what's interesting is, China 2-3 years ago, they made a commitment that, we want to achieve carbon neutrality. And as a result, several coal plants need to be shut down, and it's being planned in that way. But what also happened during the summer was actually several these coal plants were turned on because of the shortage of electricity. So we have seen some delays or reopening of the coal plant, but the general directions to the decarbonizations to green energy has not been changed. So far this year, solar and wind power and the green energy sectors, they're seeing a double digit or sometimes even double from the year before the order intake. So I think the long-term plan to decarbonization has not been changed. Maybe I'll just throw in some numbers. So electric vehicle is one of the areas I've been looking at for the last 10+ years. And at the beginning of the year, the market consensus for Chinese electric vehicle sales was about 5 million. Just for the reference, the year before was about 3 million, and globally it was about 5 million back in 2021. This year, for the first 9 months of the years, China already sold close to 5 million. So more realistically, this number will be something like 6 to 7 million. So in other words, about 20% of the vehicles, or in some tier 1 cities, close to 40% of the vehicles sold are already electric vehicles. So the shift to decarbonization will continue, and we don't see their government will change the course because of the situation we faced during the summer.
Okay, we have then 2 questions regarding your outlook. It's been a challenging year for equities and for Chinese equities. So one question relates to your outlook, more mid to long term, and the other one on the short-term outlook. Isn't there a concentration of risks that all come together in October with the Congress and other risks? Or do you see positive news after the announcement of the new government and the party Congress?
As we said previously, in our presentation, I think the party Congress will not come up with new policies. As we said, that will be done later in the first quarter 2023. But what will be clear is the personnel that will be in charge for the implementation. And there we think that will definitely be clear after Congress, and there will be a much better implementation, especially also on the local level in China, of the diverse measures that already are in the pipeline that have to be implemented properly. I think that's the short term that we see there. I think that will come out of the after the party Congress. In terms of course, currently we're facing the increase in the US dollar, right? That's a global phenomenon. It's not the weakness of the renminbi per se, but you see weakness in the Japanese yen that hit the all-time low against US dollar. You see it in the British pound, euro. You see it around the world, even against Swiss francs. In dollar is almost back at parity. So this obviously has an impact, not so much directly, but of course in terms of the performance of the fund, because as you know, our fund, the accounting currency and the reporting currency is the US dollar. So the US dollar has increased about 13% year to date against the renminbi. We don't hold all our stocks, of course, in A shares, and therefore the impact on our performance year to date is around 8 percentage points from the increase in the US dollar. The rest of we're down about 35% as of today compared to the market, the MSCI China, for example, which is down 34%. So it's pretty much in line with the market overall, and of course the overall market sentiment has of course impacted the performance of the portfolio. Even so, when we look at the stock selection. And as you know, we are very concentrated. We maximum hold 25 stocks. The stock selection is very important. And the stock selection actually has added on the positive side, but of course can't make up for the downside pressure from the overall investment environment on a global scale. I mean, I think that's probably something we observe from the US to China. So those are the longer term, I think, in the outlook, I think looks better. As we said, we expect, of course, that once these people are elected, they have all interest to make sure that to boost the economy, and shift more towards pro-growth. We have mentioned that in the presentation, that the person that might most likely replace Liu He could be a bit more growth with his background. So that's definitely positive. Also, we expect, that not immediately, but our expectation is in the first quarter, COVID measures will be relaxed, and that measure, of course, is the most important one. I think if you talk about fiscal measures in China, the cheapest measure actually is to drop the COVID policies. That will be immediate effect, and I think if that happens, you will see a significant upside move in the Chinese equity market. I mean, based on our own valuation, so we do a valuation weighted on our 24 stocks we currently hold in the portfolio. And if we look at the undervaluation that we see in our own portfolio, not talking about the whole market, just our portfolio of the HSI China Fund, we see an undervaluation, or we call it margin of safety, of over 120%. Just as a reference, at the peak in February 2021, that number was below 20%. So you see there is a significant upside potential that we see in our companies, and the quality of the companies we hold is very good. I mean, I can tell you the results for Q2 of this year, was the latest quarter we have. All our companies in the portfolio, with the exception of one, were above expectations, and the results were solid despite the challenging environment. So I think it's a lot of negative sentiment, and as soon as the COVID measures will be relaxed, you will see, in my view, a significant upside move in the Chinese equity market.
Thank you. And then a follow-up question on the electricity. Is there risk of disruption, or is there enough reserves? And are the industries producing full time, or do they still have restrictions in supply?
Sure. So over the summer, we did see some impact on some of the manufacturing sectors because of the shortage in electricity. Plants were shut down, but that's already behind us. I think we probably have seen the impact lasted for a week or at most 2 weeks. I think the external demand is a more bigger issues that people worry about. It's not on the supply side; it's more on the demand side. Especially, China still export a lot of goods, so global economy slow down will impact some of these export-oriented companies. Having said that, our portfolio, most of the companies we invest in are not in the traditional exported goods. For example, toys or cars, these export goods, we don't have any exposure to. Most of our exposure in terms of export is more related to like new energy sectors or high-end electronics. So these are like a more long-term structural tailwinds that should support it. So I know a lot of people talk about production base being shifted to Vietnam, but most of the production base being shifted to Vietnam happened in the last couple of years is concentrated in the low-end goods. For example, the sportswear. You probably go to your supermarket, you see less clothes that are made in China, but more made in Vietnam. So those low-end products are getting shifted to overseas, and they are also facing some demand issue. For example, Nike recently reported very high inventory numbers. We don't invest in any of these companies yet, but we do monitor the situation very closely. Yeah.
Okay, thank you very much. I don't see any additional question. So on that, I'd like to thank you very much all that attended this webinar. Of course, we are available if you have any other follow-up question. So feel free to contact Oliver Rothenberger or myself in Switzerland, or the HSZ group in Hong Kong. Happy to answer questions or organize one-on-one calls if needed. So thank you very much, everyone, and hope to speak to all of you soon. Bye-bye.
Thank you. Bye-bye.
Thank you. Bye.